When an unexpected financial shock hits, it cracks the foundation of the average household. Nearly 1 in 4 families operates with no emergency savings, meaning any sudden expense becomes a full-blown crisis. For those under 33, the median savings account holds just $3,200. That's a thin margin for error when you consider the rising costs of housing and basic necessities. Many people find that as their income grows, their spending habits expand right alongside it. This process of lifestyle inflation keeps accounts completely stagnant. Even as salaries rise, the money is diverted into nicer cars or larger subscriptions before it has a chance to be saved. Because of this, a goal like saving $10,000 feels massive and unreachable. Without a clear timeline or a concrete starting point, the brain views the objective as a distant abstraction, which usually leads to a vicious cycle of procrastination. To bypass that paralysis, we have to move away from the big picture and look at the micro-mathematics of the year. By deconstructing that $10,000 figure into daily increments, the goal becomes a series of small, predictable steps. This is the actual target, $10,000 divided by 365 days. To reach your goal, you only need to find $27.40 in your daily budget. It's often more efficient to find that money in your current budget than it is to work extra hours. When you earn $1, taxes and commuting leave you with only 75 cents. But when you save $1, it bypasses every filter. You keep the full 100% immediately, making it a more efficient way to build wealth. Identifying $27.40 within your existing lifestyle is mathematically more impactful than attempting to increase your gross income by that same margin. The first step is using an automated tracking tool to see exactly where your money is going. Seeing your transactions grouped together clarifies which habits are draining your account and allows you to make decisions based on data rather than guesswork. Housing is the largest expense for most households. While you can't change your rent overnight, long-term adjustments, like renting out a spare room, shopping around for better insurance rates, or finding a more affordable lease when your current one ends, can reclaim about $10 a day over the course of a year. Transportation is the second major leak. With the average car payment now exceeding $700, auditing your vehicle choice and insurance mileage premiums can pull another $5 back into your daily budget. A major part of this involves timing your purchases. Most vehicles hit their peak depreciation around year 6 or 7. By avoiding the steep losses of a brand new car and driving a reliable used model, you significantly lower the total cost of ownership. By optimizing these two fixed overheads, you've already covered more than half of the daily target. These are high-impact changes that don't require you to change your daily behavior once the initial adjustment is made. Next, we look at institutional leaks like interest and taxes. The average person carries over $5,000 in credit card debt at high interest rates. Eliminating that debt and utilizing available tax deductions can save the average worker about $7 a day in money that was previously going to banks or the government. Finally, we audit discretionary spending on food and clothes. Eliminating delivery fees and only buying apparel you'll actually wear 90% of the time clears the last $5.40. The daily target is now fully accounted for. If you are unwilling to cut any part of your current budget, the alternative is a side hustle. At $15 an hour after tax, working an extra 14 hours a week generates the same $10,000 by the end of the year. Whether you choose to reduce your spending or increase your hours, reaching 5 figures is a result of consistent marginal gains rather than a single massive lifestyle shift. Knowing where the money is located is only the first step. If you rely on manual willpower to move that $27 daily, the plan is likely to fail as soon as life gets busy. Most wait to see what's left at month's end before saving. To succeed, flip that psychology and pay yourself first. Automate an immediate transfer of your daily target through your bank, securing the money before you can spend it. Automation removes the decision-making process from your daily life. When your savings happen in the background, building wealth becomes the default setting for your finances. To maximize the impact of this automated system, you should direct that money into a high-yield savings account or a money market fund. At current interest rates of 4 to 5%, that $10,000 will generate an additional $500 in interest by the end of the year. That's a passive bonus earned simply for being diligent with your deposits. Reaching a significant savings goal isn't about finding a shortcut or waiting for a windfall. It's the result of organizing the resources you already have and putting the process on autopilot.